We lost it. I think that was Tales from the Crypt theme. I hope I don't get a copyright strike. Can they do that? What's up? It's been a few weeks. Hey, it's almost time for Halloween, and you guys have some fantastic questions in the chat already. I love it. We got tons to talk about. I don't know how we're going to fit it all into an hour, but we do. I'm so thankful that you've swung on by the channel. I'm hoping you can all hear me. I restarted the computer. Hopefully we got all the bugs out of the system. Steve, I saw you talking about candy. That's exactly... Dude, I love the song Candy by Cameo. One of my all-time favorites. It's got a fantastic funk beat to it. Cameo, the same band that does Word Up, for those of you that remember the 1980s, mid-1980s, long time ago. Pat, we'll get to your question in a minute. You brought up SCHQ. But Steve, I wanted to show you guys. You mentioned Hershey, right? Ticker HSY. One thing that Daddy likes to do, there's a store here in Chicagoland that I go to called Continental Sales. It's by Midway Airport. They have like closeout stuff. They buy things in bulk and they have just rock bottom prices, right? Things that are getting close to expiring, right? They have household stuff, but the food stuff, oh man, I just bumped my scab. That's fantastic. The old scab on the elbow. So I can't hide that, man. It literally felt like somebody jabbed me in the elbow with a knife. But back to the candy, right? Hello, Lucas. You were born in 1987. Hershey. So I got this candy. That was a good one. Check this out. We got this is, and I don't partake, right? We got a party bag of miniatures, more Hershey's miniatures here. And then we got this 155-pound bag, 155 piece. You imagine if that was 155 pounds, you'd be like, dude, this guy is huge, throwing around 155 pounds like nothing. So I got 10 pounds of Hershey's candy here, $26. And for those of you that are buying candy this Halloween, that's a really good deal. Now, I didn't want to buy it. I was over there. My wife said, please buy that. That's a really good deal. So we have a lot of candy to give away for Halloween because we'd like to. I'll have probably a piece. And I'm like, okay, that's enough. How about we get more water in a Guinness glass? Now, because Lucas, you asked about what other Halloween candy companies can you buy? Lucas, I'm a little bit upset at you because I'm guessing you don't get the newsletter. You didn't sign up for it. Whatever. I'll get over it. I might just spiral into a deep, dark depression, and it might take a few weeks or months or years to get out of, but we'll climb out of it. But I do kid. I seriously do kid, Lucas. I'll show you guys real quick here. Yeah, Ortiz, what's up? Kevin, I got to say hello to you all. Kevin Hawthorne from Lakeland, Florida. What's up, man? There is another company you can buy. That's a Dividend King. And as soon as I get these transitions a little bit smoother, let's see here. This was from the newsletter today. And I know you guys can see that. Yep, there we go. This is what I want to do. Make it bigger, Uncle Russ. It was a Dividend King's trick or your treat. And it got a little long. Hey, you all should be thanking God for AI because when I write these newsletters, I don't know if any of you have used this. I literally do a brain vomit dump into it. And some of these, I'll spend 25 minutes just dumping everything I want to say. And then I'll say, now research and make sure there's nothing else that you can add, or if there is, and organize this into a cohesive, easy to read newsletter. So Tootsie Roll, ticker TR. Now, a lot of you might see that they have a 0.96% yield. Yes, it's low, but there's a really interesting wrinkle with Tootsie Roll. What they do, and I guess I don't have too much to show you, so I'll have to tell you, they've raised their dividend for 59 straight years. That makes them a Dividend King. Remember, Dividend aristocrats have to be a member of the S&P 500, I believe, but dividend kings do not. So 50 years of straight dividend raises makes you a dividend king. Does put them in rare company, but you'll see they have lower dividend growth, right? But couple things about Tootsie Roll. And again, these are, well, we'll get to it. Debt-free balance sheet. They have no debt. Their free cash flow payout ratio, 24%. We can talk about that later. It's low. You want to see a low free cash flow payout ratio. But what they do, they have about a 1% yield, right? What they do for decades, Tootsie Roll, they give shareholders an effective 3% stock dividend. Now, I was in the shower and it hit me what this is, and I don't know why it didn't come out at the time. It's a convertible dividend. This is what it means. They do a 103 for 1 stock split every year, or 1.03 for 1, I think it is technically. So if you have 100 shares, you will get 103 shares every single year. And what you can do, and I use that as also a sidebar to explain to those of you that don't know about stock splits. I know Walmart did one, Tesla, I think Nvidia, right? A lot of them have done stock splits because they're strong companies and the stock prices just shot up through the roof. So what happens is, I use the pizza, right? This is the famous analogy. Before the split, imagine if you had 100 shares at $300 a share, right? $30,000 is what the pizza's worth. But if they do a 6 for 1, which I think, right? Didn't Tesla, one of the companies did a 6 for 1. I think it was Tesla. So that means for every 1 share you have, you will get 6 shares, but they will now be $50, right? Using this example. So it's the same $30,000. Like nothing fundamentally changed with the company. So it didn't change the size of the pizza, just the number of slices. So yeah, the pizza didn't get bigger. It's still the same. And then I use that to show with Tootsie Roll, you get a regular cash dividend that's about 1% a year. But if you sold the 3% that you got every year, right? Those shares, you would effectively get a 4%. I put over, it should be about 4% dividend yield. So, but it's convertible, right? That tells me that you can sell those shares if you want for extra income, but you don't have to. So it's kind of like a convertible dividend at your discretion, right? Whenever you want to do that. And anyway, then we talked about splits and reverse splits. Reverse splits are the opposite. Usually struggling companies do that because they're in danger of being delisted. We shared that both the New York Stock Exchange and the NASDAQ have a requirement of your share has to be at $1. And if it's below $1 a share, then you might get kicked off the exchange. So yeah, they do the opposite. This is probably going to get really important to you guys. I told you it was a fun one to write, but it's the opposite. If you had 100 shares at 50 cents, you'd now have 10 shares at $5. And yeah, I just basically said it's like taking a moldy, rotten pizza and combining all the slices into one giant piece. It's still a moldy, rotten pizza. And yeah, I don't know, I talked about GE, how they actually were one of the reverse splits that worked, but there was good reason for that. And I think some of you have done well with GE, right? And then for me personally, I'll wrap it up with this, was Aurora Cannabis. When I was starting out learning this stuff in 2018, yeah, it was gross. It was no bueno. I had 100 shares and it didn't work out so well. They've done a few reverse splits, but basically where did I put it? My 100 shares before that first split would have been about 8 shares after the first split when I sold, and then less than 1 share after the second split. And it's lost almost 100% of its value. And yeah, so basically I just wrapped it up saying, look, Tootsie Roll is for income investors. It's not going to be a growth company. It's not going to be the next Apple or Amazon. It's basically the same company it was 20 years ago. So for those of you that, yeah, anyway, there's some few other things. I don't want to read the whole thing for you, but anyway, that's the newsletter, and it could have went on a lot longer. I don't want to keep these things just yeah. A lot of people do. Warren Buffett wishes Mars was public, right? He would. I'm just kidding, Lucas. That's yeah. What do you mean you haven't read? You know what? Funny thing, my wife, I was telling her how it's been great, right? My life is just always great. Work, family, house, just everything. And because we were gone, we came back Monday night. My week was off, so I finished editing the video of what Ben asked me, which was fantastic, by the way. Shout out Ben from Vegas. And yeah, I told her, I'm like, you know what? Zero people in the world are waiting on Saturday morning to say like, hey, it's 10 o'clock. Where's Russ's video? What the hell? You know, I'm sure, you know, I'd be flattered if you lie to me, you know, but she agreed. She's like, yeah, I'm pretty sure nobody is waiting. So I said, if it comes out at noon or 1 o'clock, it's going to be okay. So, oh, dude, Chris, you sold out of, oh, that's a big transition to go from, and do share, Chris. Why? I mean, I can expect why. And that's funny. You get crazy comments in these YouTube videos. Somebody had said when I did that realty income video about the red flag, all I said, look, it's how their WAC accounting, the weighted average cost of capital accounting. I think there's some shenanigans going on there, and they're trying to make the spread look better than it is, right? And that's because they're so big, they're so large, it's kind of like the law of large numbers. They're having trouble growing the business as quickly as they did once before. And I don't know, somebody said, hey, don't listen to this guy. He's paid to try and get you to sell your shares. Just like, I'd love to have that person on the YouTube channel, because I'd love to know who's paying me money to get people to sell realty income shares, you know? And it's funny. Like I said during the video too, look, this isn't to scare you out of your shares. There's nothing wrong with realty income. I just think that Agree Realty and Vici Properties, ticker VICI, and Agree Realty, ticker ADC, are going to grow a lot faster than realty income on a total return basis. That's not saying anything's wrong with realty income. And oh my God, apparently I called people's mothers whores by saying that. I mean, some people just got upset. So that's anyway, that's a long way of saying, Chris, I understand it, and I'm sure you have some of the same reasons I do. And you know what? To be honest with you, which I hate saying that. I hate saying that, because when somebody says, you know, I want to be honest with you, it's like, oh, so all the other times you're not honest, but right now and is it you want to be honest, or you're going to be honest? Because you could want to be honest and then not be honest. But anyway, that's kind of been a pet peeve of mine when people say, you know, hey, honestly, I want to tell you about this thing. So I bought Realty Income because a lot of other notable dividend investors, yes, even Ian Lopik, he didn't do anything wrong, but back in the day, I was like, oh, this dude knows what he's doing. He owns Realty Income. Everybody owns Realty Income. I should own Realty Income. And again, it's not a bad company. It's just that I think there are better opportunities, even in the REIT space. So, but yeah, Chris, that's going from the North Pole to the South Pole, man. That's really interesting. And I don't disagree with it. And yeah, if you guys watch if you watch the video too, the last one, right? I shared how that's something I struggle with, is wanting to be not part of a tribe. You know, again, when you say I am a dividend investor, it really does kind of outsource your thinking to the tribe and painting yourself into a box. And how many times I did not buy things because I said they don't pay a dividend, so I'm not going to buy them. And then it's crazy. And I'd buy more Realty Income and not buy Nvidia because the dividend, you needed a microscope to see it. Well, you know, you live and you learn. And I believe so, Pat. Yeah. So I think 1.3 for one, I think is what it is. Or I should have put it on there. I should know better. I just spent a while writing about it. Effectively, whatever that ratio was, for every 100 shares you own, you get 103 shares of Tootsie Roll every year. And I think more companies, probably could look into doing that, because I do believe that it is not taxable. It's not a taxable event when you receive shares from a stock split, right? Because nothing really changed, just the number of shares, though there was no taxable event. So I wonder if more companies, and I don't know why more companies don't do that. If you do know, please share that it really does, because dividends are taxed twice, like Warren Buffett would say. They're taxed once at the corporate level, and then they're taxed at the investor level when you receive the dividend into your brokerage account. And unless it's a Roth, then it's delayed, or you won't pay it on a Roth, or the pre-tax account that's delayed till you're 59 and a half, or all that. But yeah, I wonder why more companies don't do that. It seems to make sense, because when Tootsie Roll gives you 3 free shares a year, you can sell them right then. You can never sell them. Wait a few years, but I guess you're deciding when you want that extra yield. So John saying KKR also does convertible shares. Dude, I don't know. I mean, that would probably be a good. Yeah, if anybody wants to Google that right quick, I mean, that's what I would do, John. I don't know anything about KKR and their convertible shares, so I would fire up the Google machine and probably the Perplexity machine and see what it could find there. Schwab share split. Well, that's that's a tongue twister. Oh my God. The Schwab share split. Now you got me. There's no sh in split, buddy. You suddenly had 3 times the shares for the same performance. Yeah, Bill. And again, with splits, nothing changes with the business. All the fundamentals are exactly the same. Refuse to eat until the video comes out. The gold eats, you have to come back down. Hey, that's a good one. You know what's funny? This week, right? We should be getting that next rate cut. That's going to affect dividend stocks. Steve, I also don't worry. We'll get to the news here, but yeah, that's going to affect dividend stocks. Going to? There it is again. He just smashes words together. That is going to affect dividend stocks, because the lower the yield goes on the treasury, that's the risk, right? They call it risk-free, but it always has inflation risk, right? That principal you get back in 10 years, it's going to have less purchasing power. The dividend doesn't, or the yield on that doesn't grow. But yeah, I don't know about gold. It's I do wish I would have held my gold and bought, but at the end of the day, it is a non-productive asset. An ounce of gold in 2025 will still be an ounce of gold in 21-25. It's not going to get any bigger. It's not going to, fart out gold dust that you can collect and melt down into new gold bars or anything like that. It has history on its side, and that people hope that you will get paid more for the gold that you bought than where you bought it at, right? But oh, what's up, Lisa? Hello. Bill, you sold out of O a while and bought WPC, Rexford, and FRT, which is I forget that one. It skipped me. Yeah, Steve, I put out it's going bankrupt. I mean, it's teetering on the verge of bankruptcy. They're issuing more shares. I think they did another offering, and they're just burning cash. They're issuing shares, burning cash, trying to tread water and stay alive and prevent the inevitable. But yeah, it's meme stock mania. It didn't change anything with the company. I don't think they could do something like a GameStop, where GameStop used that opportunity when the money shot way up to, what did they want to do? Become like a Bitcoin treasury company which that's a crazy thing in and of itself. Freaking companies are like, okay, this is what we're going to do. We're going to buy more. We're going to buy Bitcoin, which is going to, right, bring the stock price up. And then we're going to issue more shares at that higher price. And when people buy it, we're going to use that money to buy more Bitcoin. And then the Bitcoin goes up. It brings our stock price up. Then we issue more shares. And I'm like, I don't think this can go on forever. And all it'll do, I guess it'll work as long as Bitcoin is stable and keeps going up. But if Bitcoin crashes 50, 60%, I don't know. That's going to be interesting to watch. Hopefully, none of you are over invested in like a strategy, ticker MSTR, or anything like that. But at least, so you still got Realty Income and SCHD. Yeah, that's nice, man. It's Whoa, man. What was that movie with Mike Myers with Harriet? So I married an axe murderer. So we got to look that up later. Anyway, yeah, you can see how crazy we get on here, right? Whoa, man. I'm butchering it. I haven't seen that in forever. So you sold, Chris, what he did, he sold Realty Income, 99% of it. Why not the 100%? What do you keeping to go into Amazon? Thinks it's still undervalued. Yeah. I do regret not buying Google. I don't know what I was doing there. I do remember when it was in the 160s, Ari Gutman was talking about buying it and Ian Lopik was buying it. And I just thought, you know what? I have a lot of the S&P 500. It's a top holding in there. I don't want to overexpose myself to Google. And, a few months later, $100 a share later, I'm just like, yeah. Well, let me move this there. Mr. JRT's my 10 pounds of candy. We can write down for you KLAC. That sounds familiar, man. We'll look at KLAC. We'll do some news here. This is, yeah, you're I don't know what to call you, JJ. You're one of our Bitcoin truthers, right? I think. Edwin, I think Costco eventually will split, and it really shouldn't affect anybody's investing decisions because, again, nothing will change with the company. I guess it'll make it easier for people to do options if it does. How would it be different from share buybacks? So buying back the shares reduces the amount of shares outstanding, which should increase the share price over time. But yeah, for whatever reason, management doesn't, or do they buy back shares? Let me see real quick. It's just a different way of returning shareholder money. But Tootsie Rolls, shares outstanding, they do buy back shares. They are consistently going down. In 2015, they had 82.5 million, and right now they're at 73.2. So they've bought back 9 million shares in 10 years. And yeah, so they also buy back shares very, very conservatively. But again, that's very interesting. Yeah, so if a company did a combination of share buybacks and doing a stock split every year, that would be an interesting way that companies could let the shareholder decide, at least with the stock split shares, when they wanted to sell the shares and if they wanted to sell the shares. So they wouldn't be forced to take a dividend and forced to pay taxes, right? If it was in a taxable account. All right, we'll about caught up here. We'll do some news. We'll go quick on it. I got 2 weeks worth of news for you, but I want to get to a couple more of these. Trevon, yeah, LyondellBasell. I don't know if they're dying. The problem is, and this is why I sold out of LyondellBasell and Celanese, ticker CE. Celanese is one I had bought because Warren Buffett bought it. And the more I held it, the more I looked into it, the more I researched it and saw that, hey, you know what? it's a very cyclical business. And when these specialty chemical companies run into that cyclicality, it can be a buzzsaw for the company. We saw that with LyondellBasell. I believe it was 2009. That was the last big down cycle in the specialty chemicals. Polyolefins, I think, are one of their chemicals. They deal with the chemicals that go into plastics predominantly, and lots of other things. But that that's the problem with very highly cyclical companies, and that's what did LyondellBasell in little over 10 years ago. Is that cyclicality? So you're seeing it with Dow Corning, LyondellBasell, with, I don't know, there's a few others, but yeah, I don't know. And that's why, Celanese, that's why I sold out, because I said, you know what, when it's a cyclical commodity company, at least like that, there's really not much management can do to deal with that, and they're kind of at the mercy of the commodity. So another one was Boise Cascade with lumber. I had held them. They shot way up after I sold them, but then same thing, issues. And yeah, so I don't know. I don't know if I'd say they're dying, but they're definitely hurting. What percentage of index funds is NVIDIA? Well, you could just go to, I'll tell you right now, with Seeking Alpha. Here, I'll just put in, I know you guys can't see this, but I'll just go VOO. So a VOO, which is the S&P 500, NVIDIA is 7.95. So it's 8%. That's high. And that's the number one holding, market cap weighted. So NVIDIA is 8%, which is pretty massive. All right. Lisa, nice. Tesla and Google. You're much smarter than I am, because I was sucking my thumb and saying, Google's a big part of S&P 500. So you know what? I love it, dude. Bill, I love the precious metals. I had 2 gold eagles. I had, probably a good 6-7 pounds of silver. And I had an ounce of platinum as well. And beginning of 2023 or 24, it's 23 or 24. I sold it all. I mean, I just again, because it's a non-productive asset. They don't do anything. And of course, it's true to form, everybody. I sold out of my precious metals after holding these things for about a decade. I sold right as the rocket ship was taking off. But again, it's not life-changing money, and it sucks, but it's not like it made the difference between me retiring early or not. So, Kevin, dude, I've missed your last few live streams. I've been so busy on Mondays, and this last Monday we were on a plane coming home from Vegas. But all right, let's. All right, here we go. Cake to the moon, Jake. I don't think I've seen you around these parts before, partner, but. Is that a crypto? Oh, cake. Cheesecake Factory. That's what that is. All right. Oh, John. Yeah, from the thumbnail, right? Hey, you get people's attentions. You know what it is, buddy? It's making people feel something. You have to make people feel a freaking emotion. If you don't, they tune out, they drop out, they never come back. So, with that being said, we're going to go over to the land of Simply Safe Dividends, and we're going to look at the latest news. Latest and greatest, right? Now, again, this is from Simply Safe. Pause the screen if you want. We're 2 weeks behind here, so I'm going to do my best to not... Flowers Foods, yeah, they got a dividend downgrade, dude, almost an 8% yield. That is butternut. That is Dave's Killer Bread. Flowers Foods, they got a lot of names, Anyway, I just told you I'm going to go quick, and here's Quick for a sloth, right? A.O. Smith. This is one on my radar. Does anybody own A.O. Smith? Is anybody watching buying A.O. Smith? They raised their dividend 5.9%. They have a potentially undervalued safety score of 99, very safe. Danaher, another company that has been on my radar. They're like a Berkshire. They like to buy a lot of businesses. So they're very interesting. They buy businesses that are drug science, life science, drug makers, different things like that, life science tools and services. Agree Realty, there you go. They raised their dividend 2.3%. They beat earnings. They raised their guidance. I just love the company. I think they're doing fantastic. And yeah, 233 shares we have of Agree Realty now. Rolled all our realty income into Vici and mostly Agree. They refreshed their outlook on Omega. Not going to stop at many of these. Polaris. Oh yeah. Polaris is divesting Indian Motorcycles. So they gave a 40 unsafe. They think their dividend is unsafe here at Simply Safe Dividends. J&J was going to spin off their orthopedics. So there you go with J&J. It is their $9 billion orthopedics division, Depuis Synths. I know I said that wrong, but hey, we got a lot. Oh my God, we got so much. Here we go. Kenvue. New lawsuit adds another layer of uncertainty to Kenvue's dividend outlook. So they have a 50 borderline safe and a almost 6% yield. Yeesh. All right. Huntington Ingalls. This one I sent a post on X. That boat right there, the John C. Stennis. They built the John C. Stennis. Isn't that awesome? That's the boat I lived on. That's my boat. Funny story about that. I was on social. I called it my boat, and somebody said, "I don't think you understand anything about the Navy. That's a ship. It's not a boat." Well, I'm sorry to tell you, but at least everybody on the Stennis, we would call it the boat. You sleeping on the boat tonight? You going back to the boat? When does the boat leave? We called it the boat. So there you go. Too much on time on that one. Story time. Refresh their outlook on Exxon. Robert Half, dividend downgrade to 50, borderline safe. And that dividend is sky high above their 5-year average. Amphenol, fantastic company. Good God, they're a fantastic company. And one that I missed this one. They are firmly on my radar. 2 newsletters ago, I shared the business breakdowns on Amphenol. Very good. And they are firmly on my radar. And sometimes I wonder if I should not just buy them here. Kevin, you talked about Amphenol. I think you bought them if you're watching, ticker APH. But yeah, 52% dividend raise. They were founded in Chicago in the 1930s. AEP raised the dividend 2.2%. Got to move quick here. Mickey D's, McDonald's, 5.1%. It's their 49th raise. One more year, and they will be a what? A Burger King. A Burger Dividend King, mind you. 77 safe score. And then another burger, not King, Wendy's. Dividend is downgraded to 40 unsafe because they are in turnaround mode. Pinnacle Electric Utility, 1.7% raise. We're almost there, everybody. Again, Robert Half, I guess I don't know why it's up there again, but there it is, 40 unsafe. And then lastly, Target. They reaffirmed their safety score of 80 safe. And for you, my friend, I didn't write your name down with Clack. KLA Corporation, Chip Materials. I love this one because look, it says share price of $1,182. And some people might say, oh my God, that's an expensive stock. But depends on the earnings per share, the free cash flow per share, how many shares are outstanding. With just looking at that share price, I'm going to guess they have probably less than 50 million shares outstanding, maybe even much less. Let's see real quick. But dividend yield of 0.64%. Founded in 1975. Pause the video if you want to look at any of these closer, my friend. But Yeah, very fast dividend growth. Outstanding 15-year dividend growth streak. And looks like they raised that dividend twice recently. So very quick dividend raise. Yeah, looks like sky high overvalued based on the 5-year price to earnings. Again, doesn't tell us anything about the future, just backward looking. It looks, just from these very quick metrics, it looks very overvalued, but probably because it's a good company, low free cash flow payout ratio, earnings per share just stepping way. I mean, look at that. And the free cash, look how crazy that is. In 2019, they had $6.55 of free cash flow per share. And last 12 months, $28. Just, they're drowning in cash. So that's the kind of business you want to be in, right? They have so much, they're just flooded with cash. Sales growth is just, wow, mid teens, low 30s, high 20, mid 20s. Wow. Just, I was wrong. I said 50 million shares. That was 134 million. So, yeah, just fun from what I'm seeing here. Out of the park numbers. Goodness gracious. 31% free cash flow margin. That means 31 cents of every dollar coming in the door in sales is making its way to free cash. With free cash, you can pay a dividend, you can buy shares, back shares, carry it as cash on the balance sheet, mergers and acquisitions, you can reinvest back into the business. So free cash flow, I think, is kind of the lifeblood of the business. And yeah, net debt they've been paying down debt. ICR, I know you guys, broken record, but somebody new is watching. So interest coverage ratio, this tells us how many dollars of operating income, or it's also called EBIT, earnings before interest and taxes, does a company have to cover every $1 of interest on the debt. And you can see Simply Safe thinks for semiconductor companies it should be 8. Currently double that, $16.60 of operating income to cover every $1 of interest on the debt. So super, super safe company. Looks great fundamentally, but yeah, who asked that? Let me see. I didn't write your name down. It was, who wrote about Clack? Sorry. Yeah, the Stennis, the Johnny Reb. Mr. J. Ortiz. There you go. You're welcome. Precious. Yeah, I know, Bill. And of course, like anything, right? I mean, I say with Bitcoin, when my daughter, she just recently turned 18, and I told my wife, I said, at Ivy's 5th birthday party, if I would have just put in $1,000 in Bitcoin and then forgot about it until right now, we could pay off the house and I could retire early. But yeah, I still do have a couple. I didn't get rid of all of them, just 99% of my precious metals, Bill. One of my favorite pieces is from the, who is it? It's a silver denarius. It's from almost 200 years before Christ was born. Love that thing. And you can find a lot of them online. I love historical stuff like that. Just holding a coin in my hand that a person made well over 2,000 years ago is just, it's so cool. It's like, I've given a few as gifts to people and they don't appreciate it as much as I do, but yeah, those are cool. And they have a lot of them because they do road construction. They do projects over in Europe, and people would bury these clay jars full of coins, right? They wanted to hide them, but people would die and nobody knew about them until now. So from my understanding, what happens is historical societies, museums, they get the first crack at these hoards of coins, these Roman coin hoards. And yeah, the museums, institutions like that get first pick, and anything else goes to basically just auction and dealers can buy it, and then it winds up on the internet. So still, it's really cool. Oh, Kevin, why didn't you call me up and say, you idiot, you got to buy Amphenol? You should have been bugging me, man. So Edwin, I was not a welder in the Navy. I did learn welding unofficially from shipyard workers because when we were in port, so the John C. Stennis was commissioned in December of '95, I believe. I got on it a little bit less than a year later. So they were still doing shipyard work. I got on at the end of sea trials. Sea trials are what they do. They beat the hell out of the ship, right? So the ship is built and then it goes through sea trials. They do crazy things to try and break it to make sure that it's going to be fleet worthy and do everything it's supposed to do, like nutty stuff, like things called full rudder right, full rudder left, where basically they put it at almost top speed and they will crank the wheel all the way to one side to just it's nuts. I mean, you're walking on the bulkheads because the ship would list so much. And yeah, it's crazy things like going full speed and then they put it in reverse and the whole ship just shakes and you think it's anyway. Yeah. So there was still a lot of odds and ends being tied up while I was on it in the beginning. So the shipyard workers, which were all ex-Navy guys, I was supposed to be doing fire watch for them, and they would be like, "Hey, come over here and weld this." I'm 18 years old, and then they would laugh at my weld because I'd have no idea what I was doing, and they would be like, "That's the worst weld I've ever seen." But then they would say like, "Oh, you got to do this, like you're stitching and move it like this and do that." So, um, yeah, that's so I was not a welder in the Navy. I was a machinist mate. That was my rate. I worked on weapons elevators on the Stennis. There was 9 weapons elevators. I know. I don't know if this is interesting to anybody, but I know all of a sudden it's sea stories time with Uncle Russ. Thoughts on AOS, Kevin? Thank you. It's a good company in stock. Yeah, I think they had issues with China, right? China. They have a big they have a big they have a lot. I don't want to say they have a lot of exposure in China, and it's not been good. I guess I don't know, but target price of 75. Kevin, I question when you say 75. If it went to 80, would you buy it, or are you firm on 75? Because that's another one of my mistake number 322 that I've made. Whatever, where I'll say, yeah, this stock, I got a price of $75 and it'll go to 76.82. And I'm like, nope, not close enough. And then you look 2 years later and it's at $175 a share. And I was like, good thing I stuck firm to that share price of 75 and I didn't buy it when it was at 76.82. That's like, I would like to see the when right up. You scroll too fast. Steve, we had a lot. Stay away. You don't need to see much more. It's not a good company right now. It's highly speculative. The numbers are no good. I've looked at it before. Thanks, Bill. I'll drink to that. I'll drink to this. I need to buy another one. I listened to Ryan Williams on the Deep End today, and he was talking about buying a $6,000 Breitling watch. And immediately I went like, $6,000 on a watch. The last watch I had was a Casio computer watch, probably cost $10 from Zare when I was in junior high. So to me, I'm not a watch guy. I'm not. But for me, dude, I paid, I think, almost $100 for that silver denarius because to me, it's so freaking cool. But anyways, that's funny. JJ, if you see me glance off to the side, hey, I'm an addict, okay? I'm an NFL addict. I'm sorry, but I got it on in the background with no sound on. So, you know what? All right, thanks, Bill. But yeah, we can't do too many C stories because people want to understand. They want to know what we're looking at, like Amphenol. They want to hear things about Tootsie Roll, what candy companies to buy. EOD. What did you do, Edwin? I mean, were you a contractor? I didn't work with EOD. That's explosive ordnance, right? That's or the EOD techs. Those were the guys that do like underwater welding, I think. Is that correct? What's up, Josh? What's going on, man? Thank you for hey, we're enjoying it. We go, buddy. Oh, that's funny, Pat. I didn't even think of that. You're right. So Kevin says he has a target of $75 on them. And you're right. AOS is below $75, Kevin. So what are you going to do, buddy? How much did I pay for the guitar? It was like 800, something like that. I got it, man, probably 10, 15 years ago, but it's not a Gibson. This is going to be even more esoteric. It's an Epiphone. It's a knockoff. So, oh, dude, what's up? I forget your name. You're out in St. Chuck, that area, right? I'm so sorry. I forgot your name. I should be better with that. It'll come to me. 1 year target price, not a buy price. Yeah. So what's your buy price, Kev? We were talking about AOS, and would you buy Amphenol right now? Because they're like the nervous system. How did they describe it on Business Breakdowns? I think they said if the AI infrastructure, if all that is like the city, then Amphenol is the roads that are going in and out of the city. Absolutely critical. You absolutely need them. So I think that was. Oh my God. I have no idea. I've never had a Wawa hoagie. But JJ, Godspeed. I wish your stomach the best. That sounds like a gigantic risk. I would probably rather invest in. Well, I wouldn't be an invest. It would be speculating. That is the speculative equivalent of buying Beyond Meat, man. I don't know. I've never had one, but kind of reminds me of the roller dogs. I don't know. I'm not Look at this guy. Edwin was a chemist who specialized in explosives. Yeah, dude, kudos. Hey, Cygnus Bob. Let's look. GSL. I don't think we've ever looked at GSL, but we will look for you, my friend. Why? Because we like you. I know nothing about you other than your avatar. You could be the worst human being on the face of the planet. And I was like, we like him. He's all right. Global Shipley. So talk about cyclical companies, right? This is definitely a cyclical. There we go. Bigger. Marine transportation. Appears speculative on the dividend. I don't know. I wonder if this looks to me like people could be chasing the dividend. I can already tell. 2007 container ships based in Greece. Transports goods in international waters. See, this is yucky to me. Definitely not buying this for dividend growth. This is the opposite. It just goes nothing, and then all the way up to 1 year you could get over $5 and then right back down to nothing for 4 years. And although they have uninterrupted dividend growth for 3 years coming out of the pandemic, and yeah, they got some special dividends they've paid. Man, these shipping companies, like, what was the one everyone wanted? Zim, right? ZIM. Same thing. I think it's a lot of chasing dividends. Yeah, the free cash, they'll have no free cash flow, and then it's, way up because cash flow is coming down. Yeah, I don't like that. 1 year you'll have 7 cents of free cash, then $4, then -$6, then $8. Now we're down to 4, and then all the way up to 14 expected in the next 12 months. So if that happens, stock price is probably going to go up. But man, it's a tough one to. I think Peter Lynch would say if you can buy at the bottom of the cycle, it'd probably be good. But their sales are going up. That's good. But yeah, look at the heavy share dilution and then some buyback. You'd have to know why they were doing that. Yeah, the margins look okay. But I guess if you buy this, just be prepared. Well, that's good. They're paying down debt. So the debt, they've paid down a lot of debt. And I know the ICR is solid, but man, I don't know. On GSL, just be prepared if you're buying it. It's not I don't think it's a sleep well at night investment, right? But that's my who is this avatar, Steve? I can't tell. I can't tell. It's too small. AFG before Sam Schneider. Let's do it. Is that American Financial Group? I don't know. Here, we'll take a peek at it for you, Sam. Sam. As soon as I can pull that up. I guess I got to bring you guys with me here. Oh, Boston Beer. Wait, what? Can you tell it's Sunday night? No, your name is Sam. Let me hold on. Let me show you. This is what happens. I got a lot of fresh air today. Did yard work. It was a beautiful day here, about 63 degrees in Chicago. Oh, what am I doing? We're just all going haywire here. Too much fresh air. So we're not looking up. Well, I guess we are. We're not looking up Boston Beer. Sam is your name, Sam. You wanted us to look at Eddie at LW. Okay, we'll look at that quick too. Sam likes some good. All right, so Sam wanted us to look at AFG. That's what we need to look at. But Boston Beer, yeah, that's taking a big hit, right? Because they had the seltzers. Yeah, I know they don't pay a dividend, but yeah, they're struggling right now, like most of the liquor companies. Ugh, yeah, sales have been declining since 22. Yeah, it shows they don't have any debt, so that's good. But AFG, I think LW is that Lamb Weston. Nope, clicked the wrong one. Yeah, American Financial. All right, so I've never looked into them, but property and casualty insurance company, almost 3% yield. Simply Safe thinks that they are undervalued. Yeah, safe, 80 safe, dividend safety score. Wow. Established in 1872. Warren Buffett loves it. That's his bread and butter, is the property and casualty insurance companies. Dividend growth, yeah, real good, nice, very fast dividend growth. So that's solid. They're going to go ex-dividend January 14th. Special payout every November they did one, and then they did one in March. Yeah, they think they're undervalued based on the 5-year dividend yield. But what if we do their PE? Yeah, they look reasonably valued on the 5-year. So that's just a look back. Again, nobody knows the future. This doesn't predict the future. This is all just look back. But dividend yield is way above. Their PE is in line. So yeah, if you see that price to earnings ratio in line with the 5-year average, it's not a be all end all, but it's one good indicator that the price is keeping up with earnings, right? So I know price to earnings growth. A lot of people like to look at the PEG ratio. But yeah, we'll just real quick at their margins. Everything looks solid. I'd love to know what they do with their float, because that was always the big thing, that sales growth dropping a little. Yeah, they gently buy back shares. But yeah, with the float you get, Warren loved it. He became a float addict. And Lorimer Davidson, I think it was from Geico, when Warren went down to, I think he went to DC, took the train, talked to Lorimer Davidson back in the 50s. He got him hooked on the property and the insurance business. Sorry, I'm talking and reading. Yeah, I don't know, man. It looks okay. I mean, I guess it'd be all right. I mean, we'd need to dig in more about it, but here, let's see what the Seeking Alpha has to say. I know we didn't do that for the others. They give it a hold. And all the analysts say hold, hold, hold. There was a buy in May. So, and then the last one, LW, we'll start here and work our way backward. Lamb Weston, I know Kevin talked about Lamb Weston. They give it a hold. Couple buys, couple holds, no sells. So that's that. And then we'll share this tab, LW. LW. 60, borderline safe. I think Kevin sold them. I don't know if he's still watching. He knows way more about Lamb Weston than I do. They do French fries, yeah. French fries, hash browns, potato-based snacks. They got a dividend downgrade in May of this year. The dividend has been slowing now after they grew it really quick. Token dividend raise, you never like to see that, of a penny. Well, we say a penny, it's per share per quarter, so it's 4 cents a year. Still a token dividend raise, but they do think they are very undervalued. So yeah, if they recover, could be a good time to buy. They could go back again into the 80s or 90s. But I don't know enough about them to, other than just these quick fundamentals where free cash flow payout ratio is still low. But yeah, that's concerning. When you were up to 141%, then free cash flow per share right there went negative in 24. But it recovered. So it's up all-time highs, I'm guessing. So I don't know if Kevin's still watching or if anybody knows what Kevin thinks of them now. Still buying back shares. Sales flattened out a little bit. We'd like to see those going up. Yeah, I don't know. Their margin's just okay. It's not Visa-esque. And their debt's a little bit high, but they have been paying it down a little bit, and they have very low interest coverage. So, I don't know. I mean, just from the fundamentals, I would probably, Eddie, stay out of it. But, oh, that's funny. It did rise real quick. Too much of the portfolio again. Kevin, what do you, real quick, what do you think about, do you ever practice taking out your cost basis and then leaving the remaining shares? Do you ever do that? I've thought about that, but it could get a little bit, I don't know. You could have lots of positions, right? But what's the point of that? I don't know. That I struggle with that because I understand it. And it's like, I used to do that when I played roulette, which isn't all the time. But if I would start with $20 and I won, like as soon as I got that $20 back, I would put those chips. I would put $20 of chips in my pocket, and then sometimes another $5. So I'd be like, okay, no matter what happens, I know I'll have made $5. But hey, Jack, what's up, Jack? As far as Hormel, I think they should be okay. But I'll look for you real quick. Oh, he's got Jim Cramer. Is that Jim Cramer? I can't tell. In your avatar, it looks like Jim Cramer. I don't know. It's too small for me, but we'll look here real quick. I'll see what the Simply Safe and the Seeking Alpha peoples say on HRL. It's a Dividend King. I know that. Oh, interesting. So the quant gives it a sell, but the analysts and Wall Street give it a buy. Couple analysts say buy, so you can pause these if you need to read this. Buy while the market is asleep on this dividend aristocrat. That was October 5th. So couple holds, couple buys, and one sell about this turkey continues to defy gravity. And then we'll look real quick at Hormel on Simply Safe Dividends, where we got $23 a share, which is way the hell below. I know Ian, right? Doesn't Ian still own Hormel? Dividend yield is almost 5%. Just they still have a good credit rating. I know I haven't looked at this in forever. Ooh, that's interesting. So in November of 2019, they had a safety score of 99. Then in 23, it was down. December of 23, downgraded to 90. And then September of 25, downgraded to 80 as protein inflation pressures Hormel's margins, but the dividend is still supported. So let's see that. Yeah, you don't like to see the dividend slowing when the 10-year CAGR is 11%, the 5-year CAGR is 6%, and then they raised it 3%. So they've slowed the dividend growth. Almost 60 years, though, of dividend growth streak. Yeah, token raise. Ugh. Token raise. But that share price has just been beaten. I mean, hey, if they recover, but again, it's kind of like a Tootsie Roll. Are they really going to, free cash flow payout ratio, 101%. Buckets of yuck, everybody. That's because their free cash flow per share is at the lowest level it's been in a decade. Yucky. Negative sales growth. So they get pockets of negative sales growth. So, man, I don't know. I mean, I'm sure they'll be around. Oh, they're actually diluting shareholders a little bit. Yeah, sales have flattened. Man, margins are all compressing and falling steadily. All their margins are falling. Debt's low, so that's good. Their debt's coming down a little bit, and they have a lot. It just looks like, I don't know, man. Where are we gonna go from here with Hormel? Jack, so to answer your question, not for me. I think there's better opportunities. I don't know. I don't think that looks like they'll cut the dividend, but not for me. Thoughts on taking a position in a company who's cut their dividend recently? It depends on why they cut it. If management was forced to cut the dividend, probably best to get out. But if it was very strategic, then yeah, I would. Yeah. If it's a strategic cut, case by case basis, then it's probably okay. So, and the last one, my daughter still does hold cat. It's it's done well, really well. We haven't done anything. We're still dripping the shares, and she's way the heck up on it. And crazy enough, my wife will not let me forget. Hey, remember that time Caterpillar was at $90 and you told me about it? And I said, you should buy a lot of Caterpillar because I think there's always going to be need for Caterpillar machines. And what did I do? Didn't buy any Caterpillar. So my wife still lets me know that I did not do that and take her advice. All right, everybody. So, hey, Trevon, LOL. Yeah, right. So, hey, whatever. We made it. I don't know. I don't think I have anything else to tell you, but have a great rest of your Sunday. We'll do it again. We're back in the saddle, baby. And drop me a line, russ@dapperdividends.com if you have any ideas, anything you want to know, anything you want to talk about. Oh, Pat, SCHQ. It is a bond fund. I looked really quickly at it. Looks like it's best for people that want that safe, steady income. And I didn't dig into it too much more than that. So it's just retirees is probably who that is best for. And you're welcome, Sam. So yeah, you guys have a great week. Again, I'm a kid of the 80s. Pee-wee takes us out as usual. So I love you all, and I will see you in the next live stream. So long, everybody.